One, two, one, two. There we go. Good morning, everybody. As CJ, we're back again with another video another live stream, really. And we are going to do a quick stream. It's currently 8 a.m. in the morning for us. This is the London session, basically. So, excuse me. Let's see if we go here. You can see it's 8 in the morning. So this is a good time for London session open. But we'll kind of want to just go through these charts and find a daily bias, which will help us come New York session, come maybe even if we find a trend during the London session and the New York Open, right? So we want to kind of go through everything and also review the trades we did yesterday to see what went wrong / what went well, okay? So we're quickly going to go through the Telegram so I can show you the charts or the trades I took. So the first trade I took was this idea right here. I need to download it. So it was a sell on your USD. What did you notice? You notice that it's 8:30, 9:30, right? So this is the midnight open. You can see by midnight open here. This is the session open from 8:30, and then 9:30 is kind of where volatility comes in, which is this line right here. So we got in a bit early. We got in during 8:30 and 9:30. Normally you want to avoid this for it could be the market swing or during the swing, sorry. And what's very interesting, we did analysis live on DXY, right? We said that there's this liquidity down here, this low, create equal lows. We thought price will take out this liquidity, reach this order block, which I think is an order block on a different time frame. And then from there, it will bounce up to reach this liquidity. And literally exactly that happened. It went from here, hit this area. You can see it wicked once, twice, 3 times. Didn't go below once. And then it literally went right up until that red line. So what then ended up happening is that we didn't take that bias into EURUSD because that would have meant that we take out this high right here because DXY is the opposite, it would be the inverse of this. So that's the equivalent of price going up to this level here, which is the previous low, deeper into this fair value gap, sweep it, displace, and then travel down to roughly this liquidity, and you probably take some partials here and look for some of those on the left side to then see if this is the optimum exit, but there will be some exits on the way. We ended up getting stopped out by just this wick here, so that's why spreads is interesting because different brokers have different spreads. I did calculate the spreads and I shouldn't have been stopped out based on what the quotes I was getting from my broker was saying. Unfortunately though, it stopped us out. So this wouldn't have been a stop out if it was a decent broker, right? Then, no, this is not the same one. I don't know if I deleted it. I may have deleted it because it's cluttering my chart. Let me see. Okay, I didn't delete it. Then, wait, no, this is from last time. Oh yes, right here. So we didn't enter this, but this would have been, okay, what would have happened? So this is the same chart. This is that low, it's not the low, that's that high I was talking about. Was it 2 what time frame was looking at on 5 minute? Didn't have it available then. I think it was a 5 minute though. Right. So this is the high, this is the other high. So it created equal highs here. Midnight open is right here. So midnight opened here, rallied down. And we literally had this where sometimes it's so bearish, it doesn't always get the sweep before it goes down. So we had a equal high moment here, or failed high, and then price dropped and it's kept dropping, right? So it created a high over here. We swept the high, okay, and we displaced, sweeping it. We then had the displacement back, taking out some of these lows in a small time frame. We had a fair value gap here, drawn by this small rectangle. Let me see if I can zoom in a little bit for you. And we had this displacement. Price came back up into this displacement. You would have got your entry. This is the first candlestick contributing to the fair value gap because it's 1, 2, 3 candles. So you start with the one candle, the first candle is contributing towards it, and you set your stop loss above it, and then add some pips on for spread. If that's your entry number 1, you could have got in there. Then you had price displace again. 1, 2, 3 candles. So you could have had a fair value gap from here to here, which would have made this your entry when price came back up onto it. And then the first candlestick contributing is this blue bar right here. Start your stop loss above it, add a couple of pips. That's your stop loss. What happened? Again, price displaced, taking out this low. And then on this occasion, price didn't come back because it's the displacement right here. Price didn't come up to, wait, hold on, let me see. The displacement from here to here. Okay, price didn't come back up to this level. So those are your 2 entries you could have taken. And the reason why you would have got out here is because it is an equal low. If you look on the 5-minute, sorry, my mama came in. So there's some lows over here, which could have been the area where price got to. You can see it literally got to there as a T. So sometimes you can, like this is a low as well, right? But we got it from a higher time frame, which is why we thought it would be one of the targets. And then this line here is it's a swing low, like it's a deep low. You can see there's no other candlesticks near it. Like it's a deep extreme. And price literally got to it, almost to the T. Got a little bit beyond it, swept it basically. And after swept that liquidity came back up. It's a deep retracement, consolidated, reached this target right here, which I think it's the equilibrium of the daily range. And then it's starting to rally back up again. So this would have been the ideal entry, which is a 1 to 4.5. And the only thing we did wrong was that we got in too early. You can see this entry came after the 9:30 mark. So we had that, but we needed to wait for the sweep. It wasn't the time necessarily. There's nothing wrong with entering that between 8:30 and 9:30. But we need to know when the Judas swing has applied or when the liquidity has been swept. So the 2 things we could have entered would have been when price is pulling back into an imbalance. So for example, if we go to our slides, there's 2 types of setups that form: a pullback into a fair value gap / order block, or a sweep of external liquidity. So this is my most recent one. So where these setups form: old high or relative equal highs, old fair value gaps. And we'll get into that fair value gaps again. So in a way, this kind of order block right here we could have used, but we would have lost money, right? So I think the main thing wasn't the entry that was the problem, was the fact that DXY, we had predicted what DXY would do and we didn't back it. We literally to the T. Where is it? I'm going to just press enter and it works. Maybe we got rid of it. Probably did, but we got to the T. We said price will come back down. Where is it? We said price will come back down to this area right here. It's probably easier if I just use a Telegram post instead. We said price will come back down to this area right here, and then it will go up to this. It literally did exactly. That's beautiful to see, man. And so what that would have meant is that DXY was going to sweep, liquidity and then reach the other side of liquidity. So if we go back to Euro USD and we invert it, remember we would have, it looks awfully similar to this. Right. It would have been a screenshot of me. Really show you this side by side. Oh, it's in this overdrive. Okay. So I've inverted Euro USD. So what I did is press Alt I and it inverts the chart for you. So this is the inversion of the chart. This is DXY. What do you notice? Sell side liquidity is here. We sweep that liquidity, reach this area, then we go up. What happens is sell side liquidity is here. We reach this area right here, right? The order block. We almost reached the order block to the T. We had a sweep, reach the order block, push up. Sweep, almost reached the order block, push up. And yes, it's not to the T because we didn't reach this specific liquidity like we did here, but we reached close to it. So we did this analysis, but we didn't follow it suit. And that's basically what I put as my what did I put it as? My feedback. So I actually predicted DXY to make this move to a T. I just needed more confidence in backing it. On EU, I tried to implement a variation of the model I have not mastered and ignore the clear bias we had from DXY to accompany the wild idea. This is the purpose of such trades I learn first and accounts until the next day. So what I'm basically saying there is that the sweep and the sweep into kind of this area of this fair value gap, or if we're already in a fair value gap, I need to be cautious because the difference between already in a fair value gap and pushing to an old fair value gap is different, right? And that is what I maybe messed up. So we're already in a fair value gap because there's this area here. We've just been in it this whole time, but I'll need something else, either pull up into this order block or sweep. Then I can get in, right? So it's just about patience. I think I was too excited to get in. So that would have been an ideal trade. I didn't take this trade, but that is what would have been ideal, right? Then you have the other trade we took, which is AD CAD. We entered this sell here. Why did we enter this sell? So this one we waited until after 9:30. 8:30, 9:30. That's the session open. So from that session open, we rallied upwards into this fair value gap, okay? Or this order block, sorry. We rallied up into here once, broke structure over here twice. So you could have even got in on this order block right here. If you set yours high above here, or if this is a fair value gap from here to here, you got in on this low hanging fruit, you would have stepped your stop loss above this wick over here. So stop loss would have been around about here, targeting down here as well. So you could have got in earlier, but I didn't. Right, I wasn't looking at AD CAD during this time. But another setup still formed because we then had a displacement from here to here. So we had two fair value gaps, one from here to here, one from here to here. I think you can zoom in a little bit. There we go. So we have one fair value gap from here to here. We have another one from here to here. We always enter in on lower hanging fruits. That's why we entered on this one. And then we set the stop loss above the first candlestick or first fair value gap. You can see this is the first candlestick and the first fair value gap. We should expect the price to retrace back into that. And so we set our stop loss above it and added a couple of pips for spread. So I was thinking behind this specific entry, but we could have gone in from here, setting a stop loss above here. That would have been active as well. And what do you notice? Well, we actually forgot about the trade, as in I didn't set any alerts. I didn't, because normally I take out some partials, right? So price got to here and rallied back. I didn't see it. You can see this is the ultimate target, but these black lines can be areas where you take some profit. So I did set my stop loss after I seen price rally maybe round about here. I set my stop loss to above here because there was potential for it to drop again in afternoon session. Any which way, we said we closed at 1 to 2, didn't see any alerts, didn't set any alerts to take partials. We need to place greater emphasis on relative equal lows and highs, because this, I believe, was from a relative equal low and high. So don't know if I have my, okay, yeah, boom. You see, it actually ended up almost pretty much reaching our target right here. So I'm going to post in. It would have meant that I had to hold overnight, which I don't like doing anyway. So I would never have done this. Okay, I just wanted to say that the direction is super important. And this sell side liquidity is come from two lows right here. And what do? We reach it to the T. So it's actually very strong liquidity here. So I would expect price to still take this out. But what's my point? My point is this, that these equal lows are where we get our entries from, but it's also where we set our targets too. I don't really want to search for that right now, but the idea is good. We took our stop loss here because that's where we set our stop loss. But that's passive. That's me making mistakes, and I'm still making the 1 to 2s. If I was on top of my game, I would have closed majority of my trades around about here. So that's a 1 to 4. So remember, there was also another entry we could have had from here to here is a fair value gap. We entered on the low hanging fruit, which would be literally the next candlestick. And then we set stop loss above this high over here, which would have been safe, and there would have been two trades taken. I'll just show you as an example. So there's a fair value gap here. Right, we would have entered on the low of the fair value gap. This is the first candlestick contributing to it. Set it here, add a couple of pips, and then our targets would be the same. So it's a little bit less restored ratio, but still the main money. And so yeah, that is the idea behind this specific trade. And yeah, let me go back to what we actually took. Just post this in. I wouldn't have overnight. There you go, to the T. Okay, so those are two trades we took yesterday. So what are we gonna do right now? So now it's a new week. So what are we gonna do? We're gonna do new analysis. We are on the time frame of New York time zone. So essentially, there is news today as well. Let me make a note of that. So I'll be Forex Factory. Let's have a look. Okay, so we have 3 p.m. news. Already had AED news. Okay, so what's the plan? So technically, the daily has already opened. The New York midnight session's open. So we're going to mark some of the New York session opens and predict whether we believe the next candlestick will be bearish or bullish, right? So we're going to start off with DXY. Because the reason why I like starting with DXY is because it helps with a lot of pairs. 1, 2, 3, 4, 5, 6, 7 pairs. Just by analyzing DXY, I can get a good bias on multiple. Multiple different pairs. So starting off with the daily, we have this range over here. We are currently above the equilibrium. we've fulfilled the top of this fair value gap. I think this is, I don't know what that is right now. So if you look at this fair value gap right here, from here to here, what we've done, we've wicked the top, and we're in a premium. So we're in a premium, we've fulfilled the fair value gap. This liquidity over here, this liquidity over here. But because we're in a premium and we've just fulfilled this imbalance, I believe price will now be bearish. You can see here we've come above the top of the fair value gap. On the smaller time frame as well, we've had that shift. We've taken out this low over here, which is potentially a sign for us to go to the downside. There is some, I guess, some technical small imbalances within this area. So I do think price can eventually get there. But mainly because of the fact that we are in a premium and we've fulfilled this imbalance, I think price can head towards the downside. If we look at it's a bit difficult to see. So yeah, I think we're going to be bearish here. And our target will be this liquidity here. Let's see if there's any other kind of imbalances or anything. There was imbalance here, but that's been filled. Yeah, I think it's just liquidity versus this. The only thing I would say is that there is still technically imbalances over here. So there is a potential that price does push up a bit higher because there isn't any imbalances here. There's only this liquidity all the way down here. So it would take a lot of work for price to get here. But here there's imbalances which could fuel the move. But we are of the opinion that because we're in the premium and we've fulfilled this fair value gap, there could be some momentum going this way. We've also swept the top of the boundary, upper boundary. So this high right here, we've swept it because we had equal highs from here to here. We had equal highs, relative equal highs, that is. 1, 2, 3 candles, and we've wicked above it and fulfilled the fair value gap, and we're in the premium. So I believe we're going to be that bearish for the next candlestick. Like I said, though, there is plausible possibility that price goes up. We're not trying to be perfect all the time. We're trying to say which one's more likely because of the combination of things of 1, the premium, 2, the fulfillment of the imbalance of the fair value gap, and 3, the sweeping of relative equal highs. I am of the opinion that this could strongly go down. So we're going to put this down here, and then there's liquidity here too. So that's our idea. So that means we're bearish on the dollar today. So with that information, we're going to take that into all of the markets that have USD, starting from top down. So we have AU over here. Let's have a look. Remember, we're bearish on USD, so we'll be bullish in this. So another thing to note is that because it's 4 a.m. in New York, the open or midnight open has happened. So we're going to look for time. Remember, the key for this model is time and price. I like that model because it literally uses the axis. Whenever you have a graph in the mathematics, whether it's a line chart, bar chart, whatever it is, the most important information you can gather from the chart is the X and Y axis. If you're talking about years on the bottom, so that's time, and then you're looking at equity and you're looking at business, and that graph is going up from bottom left to up like this, right? Let's say you have a chart like this, bam, bam, bam. The time is on the bottom, price or equity or whatever it is on the X, Y axis. Then what can you tell by the gradient? You can draw this line right here and say there is a trend of it going up. You can also look at the shape of it and say there's a trend of it going up, that you're making money over time. So whenever you're looking at any chart, the most important thing will be the X and Y axis. So the fact that this model is based off of that, we start with time and we look at price. That's literally the basics of it. Obviously, there's philosophies behind what we do, but that is I'd say the foundation of it. So this is the midnight level right here. And then 8:30 will be here, and 9:30 will be here. The main reason why we say this 8:30, 9:30 is that we expect manipulation from the open of New York session. We expect some manipulation, and normally that manipulation is finished by 9:30. Does not mean, like I said, we can't get in during this time, but we should expect it. That's all we're saying. Now, we are bullish on this. Okay, so I'm gonna grab the open. So with a bullish candle, the open is at the bottom. A bearish candle, the open is at the top. So that's why we're taking this level right here. We're going to want to drag this here. And we are going to call it the midnight open. Okay. So when we are bullish, we would expect it to open. We expect it to open right here, to manipulate here, and then displace towards up here. That's the idea. That's the power 3. So the power 3 is that we open here, we sweep this, and then we eventually push up. And I'll show you why. Look, when we're bearish or we're bullish here, right? This vertical line, the first vertical line right here, is a blue line, right? So this is a bullish example. We opened here, we manipulated down here, then we displaced upwards. And if we're saying that we're bullish because of USD and DXY, we're expecting price to come down here and then go up. Okay, so midnight opened, it swept liquidity above here, came to this order block, then displays all the way down here. But we're saying that this is the Judas swing, and we are predicting price to go up, and it's currently moving upwards. Remember, this is during London session, so prices come back down. This is fair value gap right here, then it's going up. However, we're not done yet. We're bullish, but we need to find targets. So first thing is swing highs and lows. I like to draw ranges. I like to draw them because it gives me an idea if we're in a discount premium. So right here, we're in a discount, which is where price is cheap. And when price is cheap, we expect buys, right? We then also have the fact that we have, I'm not going to draw this. I might actually. This is the fair value gap. The only imbalance left on the 4 hourly. We've now fulfilled it. So price could be retracing from it. We then could be targeting some imbalances up here, maybe. Not see any. So my next target will be any relative equal highs, maybe. Some relative equal highs here. So there's some buy side liquidity on this side. Just target this. This is these levels, I guess. I'm not the biggest fan of these levels because it's not the cleanest, but it is what it is. So on the London session, we've already kind of had the move. What we would be looking for is a sweep of liquidity or pull back into old fair value. We swept into this, pull back to this old fair value gap right here. The market short shift hasn't been clean. Like we haven't displaced above an old high. Maybe over here is the first instance. But anyway, we're targeting that New York Open anyway. So this is a good setup. Let's call this. No. Medium interest. I'll go to medium. Now we can move on to another USD pair. So just for those that are either tuning in now or not sure what the purpose of this stream is, we're just going through the charts, creating a daily bias, and then that will help us when New York opens. Because what I realized last stream was that when New York opened, I was looking for setups and I only found 2 because of the fact that I hadn't done the pre-work. And don't forget, I haven't looked at the charts in a while. So we did spend some time looking at the daily buy. So we reviewed our previous trades yesterday. We're now going through each chart and just making sure that we have a bias for the day. So if we are going to look at any potential entries, we can then have the bias already done for us. And then not only that, we can focus on finishing off the mentorship as well. We did say we're going to start streaming, or not streaming, start entering the markets from the 1st to the 8th of August, 1st to the 8th of May. And we have been doing exactly that. So since last week, Friday, we've been studying, not just studying, but putting our studies into practice and continuing to finish off the mentorship in the background. So we are currently only using what we know, and there is still, we're just over halfway. We are seeing some good results, but we are essentially, if you realize some of the videos we're watching, they'll say to do homework, to do back test, and to test out, look for these things in the market, see how they are, get practice and experience. So that is why we're using this 1st to 8th to kind of do that. So although we haven't finished, we're still learning the things we've put in our slides and made notes of from the videos. So it's still not, even though we're not finished, we can still be profitable, essentially. So now moving on to Euro USD. So we have this pre-existing, let me get rid of some of these liquidities. So this sell side is still technically valid. So I'm gonna keep that for now. That buy side can go. This can go. I will use this for the most recent. We can get rid of this. Get rid of some of these vertical lines. The most recent. And then this buy side is still intact. So drag it a little bit more across. Can get rid of this as well. I don't mind keeping the things that don't affect my analysis now. So we have this range from this low to this high, and we are sitting around equilibrium. We did say we were bullish up until this point, I believe. No. I don't remember what our bias was. I think it was bearish. Okay, so now we've been bearish. We've come up to this place right here. We are bearish, sorry, on the USD, which means we'll be bullish here. So we are literally, that black line is equilibrium. As soon as you touch this, you become bullish, right? And what do you notice? We touched it to the T. And not only that, sorry, this sell side liquidity is in the way. Not only that, you can see we opened right here, swept or manipulated to the equilibrium, and therefore can be bullish. We have this untapped buy side liquidity. Not only that, we also have the fact that we failed to reach it this time around, which was last week Friday, and that liquidity is still going to be there. So it's still there. We created a high above here. This is going to be some decent resistance. Some traders are going to be looking at this and say, you know what, this is resistance, and so there's going to be more liquidity over here. So I think this, though price is closer to here, I would have liked for price to sweep this and then push up to the buy side liquidity. But as we saw from last time, not always do we get the exact sweep, but we get the shape. So for example, DXY have reached the order block concerning the sweep up here and then displaced. However, on this occasion, Euro didn't reach this area, but it still went and delivered to this side. And yes, it didn't reach here, which DXY did reach. But at the same time, the shape again is what's important, because we have technically taken this sell side liquidity over here, which we can actually get rid of, because this is equal lows. Low here, we've taken that out. So yes, we haven't taken this out, but we've taken this out. And then we've also taken this, we've reached this equilibrium to them, front to the upside. So that bullishness, can definitely be accounted for. So let's mark out some of these levels for us. So this is midnight session. This is 8:30 and then 9:30. I'm gonna go back to that midnight and mark it across. So the trend line and that open. I'm gonna drag that all the way to 9:30, and that is the midnight open right here. Okay, so that's the midnight open. We've manipulated here. We've swept this. Well, to be fair, this liquidity has been swept. Reached the equilibrium. We are now pushing upwards. We've just taken out this. We actually, with displacement, took out these highs. Price did not come back to this area, so this is not even a missed opportunity. But ever since, you can see here, we have this displacement here. Price came back down into it, this order block as well, and then it's displaced again. Then we have another fair value gap right here. We actually came back all the way down to this order block right here. But the fair value gap is where we take our entries. If we aim for low hanging fruit, it would have set the stop loss below the first candle contributing to this fair value gap. 1, 2, 3. This is the first candle. We set it below the low and then add a couple of pips for spread. This would have been a potential entry. Might sneeze. Okay, I got the mute button in time. So essentially with this, I'm not going to enter during this, but we'll probably just watch it maybe. And then before that, though, I want to set my target. So at the end of the day, or overall, we are aiming for this buy side liquidity over here. We do have news as well at 3 p.m. So it can be fueled to take us to one of these liquidities, either down here or up here. Now, this is untapped and we're bullish for the day. So we are definitely going to be, I'm going to take this off of red so we know it's bullish. And so, yeah, we're definitely going to be looking for bullishness. Okay. So here we're bullish. Now we can set, well, we have the target all the way up here. There's going to be a lot of low-hanging fruit. Obviously, there is. If we can go to a different time. Let me see if there's any other relative equal highs somewhere. It's more like a zigzag. So it's just going to be liquidity above these highs. So we can just literally make a note of some of them. Liquidity over here. And so we can be then taking partials as we are heading towards our ultimate target right here. So potentially we can enter this. We say like 7.5 pips like this. And then, so low hanging fruit is 1 to 1.3. This is low hanging fruit at 1 to 6. Low hanging fruit at 1 to 13. Oh, that's not low hanging. This is the ultimate goal, 1 to 13. So it's this idea. This is during London session. What I would expect is for price to, let's actually just enter this real quick. So we're going to enter this on a little bit of a lower risk because of the fact that this is during London session. But the model works for London session. I just need to master it, the rules and what we're looking for. But utilizing the power 3, I need to stop saying so much, sorry. Utilizing the power 3, we can see that we've got the manipulation, so the liquidity. So this is very much valid. So you can see price is already moving. That's fine. Takes us like about 10 pips. And we'll probably risk maybe like £5. So B067. 7. 168. Okay. We've entered the buy on this. And we're still bullish for when New York opens. Our ultimate target. The reason why I like this one as the ultimate target rather than aiming up here, because this is much higher, but also there is, again, a failed reach of this high. It's going to be some liquidity up here. So this is a 1 to 11 now. And the level is 11703. Just set my take profit. So the good thing about this, it lines up with the bullishness from, let's see what's the best. Might be the best view right here. So Telegram or the Telegram. Okay. So yeah, it's a trade right here. This one I'll probably wait for when I open. rather than get in here, although it is supporting the power 3. I like this EU more because the shape of it, we've taken out market structure, we've displaced multiple times. So it's like a compound, number one. Number two, on AU, we have this high over here. So there is some resistance towards price. So I would rather wait for New York session open. With this, you can maybe even, because we could have gone here as well, maybe enter multiple times on this as well. If we displace, taking out the previous high, retrace back into that displacement range, that is a definitely a valid re-entry. Okay, so we have more USD pairs. So let's go on this daily time frame. Okay, so this we filled the Fair Value gap, which is from here to here to here. So we get rid of some of these annotations. So we this Fair Value gap from here to here, we filled it. No, I need to stop doing that. We filled it because we've come to the bottom of it. We're in the discount. DXY is bullish or bearish, so we're bullish against it. This looks like definitely a buy to me. We've had the manipulation, part of the power 3. If we're bullish, we've opened, we've swept down. This accumulation is all we need for price to now deliver. And we know that accumulation is the same distance from the open to the bottom, mapped upwards. So that is the idea. And so with that being said, this is all the accumulation of the buys needed. So if we now mark out the midnight, 8:30, and then 9:30. What do we notice? Let's now try to find some liquidity. So we have liquidity here because that's equal lows. Then we have, go to the hourly, might see some more. We have liquidity over here as well. This is kind of almost equal highs. Just buy side liquidity. And then we can drag this. There's some buy side over here. We've taken this one out. And then there's obviously buy side over here, but we'll leave that for now. So let's get rid of the old vertical lines. Like so. So we've entered this buy during London session. GU. We've filled this fair value gap. So I don't think I really need it. We have displays taking out this high. You can see with this displacement, this would have been perfect, although we didn't actually come back down to it. There would have been an entry here. Potentially might make an entry over here, but we have the New York Open as well. I think you probably find 1 minute entry. Like you would have got an entry here, though you had to have had a big stop loss. There is value up here. Low hanging fruit. There's one over here. You can even get in potentially here. My stop loss. Maybe like over here. Personally, the low hanging fruit. Where's my other liquidity? There's some here now. This will be my target. Add an alert here. So I would like an entry here with some stop loss here, and then I'll be targeting liquidity up here, which is the 1 to 8. AU, I don't want to enter during because I don't like this. So I would like for New York Open for that. GU potentially we can get into. There'll be a 6 pip. Let's just say 7. GU. Probably use risk maybe 5. So it'd be like this. Ow. Okay. Three, 5, 4, 6. Yeah, only let me get in at a certain price. I think I need to add some more money to the account. So we got in 3476. Okay. So these are not active. Potentially might add some more cash if I want to enter again. I'm just gonna I'll just have the tab open. So we're ready to deposit if need be. So EU currently is in drawdown somehow. Be able to create a high over here. I've got the button ready, so there's a ready to deposit anytime. Low key, for some reason, my margin isn't high, so I'm gonna add some money anyway. Let's do this much. Now, although I was planning to go through multiple of these pairs, it would also help for practice. We have spent, we spent almost an hour, and I do want to do some other things. Okay, money's come through. I do want to do some other things as well. So what I will do is I'll take a break. I'll do the mentorship in a bit, like some of the videos, and then after the mentorship videos, just before New York Open, I may come back again to do some analysis on the daily time frame, and then we can go from there. For now, these are the 2 trades we've taken. We posted them into the Telegram. I like them a lot, and what I like to do when you enter a trade is to literally close. So we entered into 2 trades. Our margin call's getting quite high anyway somehow, even though I haven't risked that much of the account. So with that being said, we're going to be careful. We don't want to over leverage. Excuse me. We don't want to over exert ourselves right now. We're also in practice phase, so I'm not risking so much money. That's also why I'm not being too greedy, and I want to learn from the ones I've taken because we've done deep analysis on this. So rather than rush into a trade, doesn't work out, we learn, sure, but I'd rather learn from the few that we spend time on rather than rush trades, because then I know, okay, because I spent time on these trades, these are what I would actually do. So with that being said, I will definitely catch you guys later today. I will either stream during I might start streaming maybe around 12, maybe 1. So we can do a little bit of the mentorship before the markets open for New York. So yeah, these are 2 trades we've taken. Again, if you want to see them, they've been posted here. So you know that this is not hindsight or anything like that. We're doing this live. You know, this is the current time, 9:34. Obviously, this is New York, so it's 4:34, but it's 5 hours behind. So perfect. I don't have to check if it's not very replayed. Like, it's not replayed. There you go. Can't go any further back. And I don't even have it anyway. So yeah, I will see you guys later today. It's been with CJ. Say peace.